Hello, everybody, and welcome to another edition of Transportation Insights. My name is Patrick Berglund, and I'm here today with Neil Dekker. Neil, could you please give a short introduction of yourself?
Sure, Patrick, thanks very much. I'm a little bit long in the tooth. I've been associated with the container industry for 30 years now. I worked in the industry for 10 years with Saf Marine, that was then bought by Maersk. 6 years I was a journalist with Informa covering the Asian market, and then 11 years heading up container research with Drury. I've been with Infospectrum, my current employer, as a senior analyst for about 15 months. We cover the credit risk market.
Beautiful, perfect. So I've really been looking forward to have a chat with you today, Neil, because there's one particular topic that is repeatedly echoed within our customer base and within our network, and it's a huge worry these days around carriers and their financials, and the media has a tendency to sort of paint the quite gloomy picture. Is it really as bad as it seems? What's your take on this?
Well, we've just seen some of the 2019 annual results come through for the carriers. I think some of the stuff that's come out in the media is a little bit gloomy. In the wider sense, you know, what were the fundamentals of the industry like in 2019? We still had reasonable demand growth at the global level of about 2%. Okay, that was different at trade route level. Trans-Pacific trade certainly came off a bit because we had the imbalance with the restocking in comparison with 2018. Supply side growth was manageable, and in 4Q19 we had a lot of the bigger ships going into the Asian yards for retrofittings. That was better for the supply demand balance at trade route level. Obviously, Patrick, you and your clients will be well versed with the freight rate trends, and you have infinitely more detail than I have my hands on. But I mean, just looking at the SCFI as an indicator, spot rates were reasonably okay, and east-west trade lanes didn't come off hugely. Contract rates were renegotiated fairly well, and a major cost element for the lines obviously being fuel. If we take IFO 380 average rates in Rotterdam last year compared to 2018, they're about 15% lower. So the fundamentals for the market, if you like, were okay. How does that translate into what we've seen from the results? A lot of the lines, reasonable net profit level. Usual suspects, Yangming, Hyundai and Zim did make a net profit. CMA CGM is a slightly more unique case there. But you know, some of the players like Hapag-Lloyd made some decent money last year. AP Moller still pretty strong. So I mean, fundamentally, as far as 2019 was concerned, you know, the market, the industry, the larger players was in decent shape, quite frankly. So I think painting the picture of doom and gloom is a little bit misleading. We must also remember that there were new regulations last year, new accounting regulations, whereby lease agreements come onto the balance sheet. So that makes some of the carrier profile look a little bit worse. And if you're a carrier that has a large percentage of your fleet leased, then your balance sheet's going to look a lot different to what it was the year before, and additional interest payments there as well. So that's something that needs to be borne in mind.
Cool, but in general, as we've gone into this year, right, the big sort of items is that volumes have declined, right, because of COVID-19, and even more so, I think now that Europe and US are shutting down, and it's sort of congesting a lot of the flows, right? In this morning, I even heard information that boxes are piling up in Dubai in waiting for European ports to open up and be able to accept the boxes, right, to the final destination, and so we have boxes in terms of volume shrinking to some extent, and then we have carriers parking or canceling their voyages, right? and this has to be bad for carriers, right? Don't you think we're potentially looking at another Hanjin situation here, or is there something instrumentally different than back in 16?
2016, first half of the year, the fundamentals of the market in terms of supply and demand were actually good. They were better than what they are now. The malaise, if you like, started on the Asia-Europe trade, which it usually does. There was no specific reasons for this, but a freight rate war was being carried on for the first half of 2016. There's no point in pointing fingers at particular carriers. All of them were involved, although anecdotally, I know from all my conversations with contacts at that time when I was with Drury, the Korean lines, Hanjin and Hyundai, were significant rate cutters. It wasn't just them, it was lots of lines. So we had a situation after Chinese New Year, which is usually quite weak with freight rates, where rates quite quickly through to April went down to as low as $50 a TEU, which is unprecedented in the market. And at that sort of level, of course, no one's going to make any money. You're losing enormous number of dollars every single box you load. And of course, you're never going to make money on the backhaul anyway. From Asia, North Europe, the contagion infected Trans-Pacific and other trade routes. So by the middle of the year, all the rates from a revenue perspective were, pretty much on their knees. And given the mismanagement with Hanjin in previous years, poor profitability, high debt structure, in the end, and with the Korean government not willing to back up two carriers, Hanjin fairly suddenly failed in the August of that year. I think if you compare that to this year, a lot's gone on between 2016, 2019, 2020. Fair amount of consolidation in the market. So we have a top 8 group of global carriers now, as opposed to maybe a top 12 then. I think it's very difficult to say, do the carriers being leopards, have they changed their spots? Being an old cynic like me, you could probably say, well, have they or haven't they? But I think the Hanjin was very much a shock to the global industry and all the top players. And I think despite the fact that there remains quite a lot of rate volatility across the routes, and you and your customers know that very well, the lines are commercially more responsible these days, and it's not so much about market share. It is about good revenue, good profitability. And if we look at the way the market's moved since Chinese New Year and the onset of COVID-19 and the negative factor with global demand coming off, spot rates haven't declined as much as probably most of us, myself included, would have thought. The week-on-week decline has been there, but not significant and manageable for the lines. And the other major point which you mentioned is, which didn't happen back in the 2008-2009 financial crisis, was that the lines have made quicker, more significant cuts in terms of void sailings. And now, much more significantly, not just the void sailings, but the entire service suspensions. 2M, for example, is cancelling 2 Asia North Europe strings. And again, if we go back to 2008, 2009, when there were individual carriers before the alliance structure, which is another big point here. Independent carriers like MSC, they chose not to void sailings or idle, lay up ships. And that being the second largest carrier in the world, that was a significant factor. They were very conscious about not losing market share. So now we have a very different mindset in the industry. The lines are, they're very mindful of their revenue, and it's not that they're working inclusion, not at all, but because of the alliance structure, the top 8 lines are able to take a lot of capacity out of the market quickly to rebalance supply and demand, to make sure that we don't have this rate erosion, which is absolutely crucial for the health of the industry moving now and moving forward.
Yeah, absolutely. So there's a sort of like a fundamental piece that's at least in place in today's market relative to what we saw in 2016. I fully agree on that. But what's the outlook for carriers given the crisis, do you think? As we just debated, rates are so far not plummeting and they're holding relatively steady. We also see an uptick on some of the backhaul trades like Europe to Asia, where the rates are now on the short-term market at peaks we've never seen in a long time. And do you then expect cargo to start moving again soon, or what's your outlook for the carriers?
Yeah, I mean that's a great question, Patrick. Difficult for me to answer. I'll certainly give you my best view with what I hear from the market and contacts I speak to. Just the first point might be fairly obvious, but anything I'm saying now is it's not the gospel. It's not the Infospectrum or the Neil Dekker view. And of course, what I'm saying now, no doubt, will be very different in 2 or 3 weeks' time.
Yep.
There are some, forgive me for saying, but there are some rather gloomy forecasts out there at the moment, talking about 10% decline in global volumes and 20 billion plus decline in carrier profitability. My personal view is forecasts are fine, but I think at the moment forecasts are perhaps a little bit meaningless, if you don't mind me saying, because a forecast now won't be the forecast in a month's time, as I've just said. That I think we're all going to be clear here. The data points that we have at the moment in terms of demand, port throughputs, we only have for China. We only have January and February data. In any case, 1Q is weak seasonally. Historically, it always is. Always skewed by Chinese New Year volumes. Okay, February volumes at the top 8 ports in China were off by 20%, but you would expect that anyway. I haven't seen the March numbers come in yet. So a little bit early in terms of demand. If looking at the carrier financials themselves, of course, we haven't seen anything for 1Q. We won't see that till probably May. So the 1Q carrier financials will be an indicator of how much impact so far COVID-19's had on the bottom line. My take on that is that yes, it will be a negative impact, of course, but again, firstly you've got to look at the skewing impact from Q1 anyway. Secondly, we've already spoken about the fact that freight rates have held up, let's be honest, pretty well in 1Q. Also, another major factor for the lines is that massive decline in IFO 380 fuel prices, and indeed the spread between that and LSFO. Beginning of the year, that was about $300. The spread now is about $50–60. So IFO 380 in Rotterdam today is what, $180 a ton. This time last year was over $400. That in itself is a big help for the lines. That's not a get out of jail free card for them, but it's a help. So I think really a little bit early days to talk about the impact on demand. The one unknown that none of us really have a handle here is how deep, how long the peak impact of COVID-19 is going to be. The more optimistic of us might think it might only last another month. The less optimistic or pessimistic, we could be in this for the long haul for another 3–6 months. So what's key for carrier financial profitability is always Q3, which is the peak season in the east-west trade routes. It's very likely, very possible that we won't have a peak season Q3. So that in itself must be worrying for the lines. That's the first thing. The timing of the recovery, Patrick, is it going to be June, July? Is it going to be September? Or is it going to be only Q1 2021? Another vital point, and when the recovery comes, it's likely that the recovery isn't going to be huge on day one because of the impact in US and Europe with the lockdown, people at home, personal debt's going to be increasing, unemployment, people haven't got jobs, they're not necessarily going to be going out buying huge numbers of TVs and all the sort of stuff that they were in days gone by. It's only only going to be vital goods. The ability for even big supermarkets to restock when their warehouse is already full, and potentially, you noted earlier on about port congestion, the ability of ports to handle ever increasing numbers of ULCVs coming into Los Angeles and so on, that might be more difficult. MSC has just introduced this quite interesting program this week, of the ability in the future for shippers to offload cargo at key ports like Busan, port in Saudi Arabia, Lomé. So that might not be the end destination for the goods, but it's an ability for shippers to, if you like, temporarily store their goods mid-transit, if you like, before then moving through to Rotterdam or Los Angeles or so on. So supply chains will be freed up. So I mean, in answer to your question, it all revolves around how long the peak of the COVID is going to last, and when the recovery comes. A big question also for the market, for the lines, for shippers is, in days gone by, we've talked about, you know, it's a shipper market at the moment, it's a carrier market. I think I would like to think out of COVID-19, we move away from this and we have a much more collaborative approach, because let's face it, we're all in this together now, everyone. It shouldn't be a case of, well, shippers get the upper hand or carriers get the upper hand. So in this time where there's been extra costs for carriers, are they then going to hike rates up in September, whatever? I hope not, but it's, you know, it's likely.
Yeah, let's wait and see. I think for now, everybody's sort of scrambling to make ends meet, also on the shipper side, getting the equipment or having a valid contract. But the fact of the matter is, Neil, that time flies. I've already stolen more than 15 minutes from you.
Oh, wow.
I wanted to really thank you for coming on, and I believe more so than ever, it's going to be vital over the next weeks and months to come to stay informed and have a close look at the carrier financials as our shippers think about their new long-term contracts and who to put their and which sort of baskets to put their eggs in when it comes to choosing their suppliers. It's a market today that we learn new stuff by the day. More vibrant than ever, and I would just encourage all of our customers to pick up the discussions in our discussion forum online, which is available at community.sonera.com. Again, Neil, thanks a lot for coming on and for sharing your perspectives, and I look forward to stay in touch with you, and stay healthy.
My pleasure. Thanks very much, Patrick. Thank you.
Thank you, Neil.